Hi, everyone. This is Jason Burack of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today's special guest is a first-time guest. I caught his speech that he gave at a Mises Institute event. I thought it was very good. Looked more into his work. I've actually heard of his website before, Real Clear Markets. He's a political economy editor at Forbes, editor of RealClearMarkets.com, plus a senior economic advisor to Toreador Research and Trading. He just released, about a month ago, a book on how the economy works, Popular Economics, What LeBron James, the Rolling Stones, and Downtown Abbey Can Teach You About Economics. John Tamny, thank you for joining me.
Hey, thanks for having me.
Now, John, your book, I think what you want to do in your book, according to the basic summary, before someone starts getting into the book, is that economics is really pretty basic, and it says, in fact, it's everywhere you look. Is this something that we're normally taught in most schools about economics, or is this kind of the exact opposite?
I would say it's the exact opposite, and it goes back to what Walter Williams told me years ago. He was talking about a professor he had at UCLA who told him, if you can't explain it to the average person in a way they understand, you don't really understand it. And that's always been my view. I find it offensive that economists try to turn things into charts and graphs and demand curves and all that. No. Economics is simple. It's something that anyone can understand. It's about human action per von Mises. And so why not explain it through stories that people know? The Rolling Stones, University of Michigan football, LeBron James, things like that. Because that's all they need to know to understand the economic aspect of the world around them.
Yeah, I think that's a great point. And one thing that attracted me to Austrian School of Economics, I don't know how you found it, was, I heard Peter Schiff, and then I started going to the Mises YouTube channel and watching lectures, and then I got more into the books. It's a lot of pure common sense. A lot of it's not rocket science, not until you get more into like the later versions, the von Mises works and stuff. But the most basic stuff, whether it's Henry Hazlitt's Economics in One Lesson, that's a book that pretty much anyone can go out, even if they don't have much of a business background, and they could read Economics in One Lesson in a couple hours or quickly on an audiobook, and they can understand pretty much everything that Henry Hazlitt's talking about. And that's a good summary of the Austrian School.
I agree. What I've often told people is they before I wrote a book, is they would say, well, what should I read? And I'd say, quite honestly, and I'd preface it with, don't be offended by this, buy Economics in One Lesson. I read it once a year myself, and the idea is if you read that, you'll understand economics better than 99.9% of economists. Most don't get it in the way he did. And let's face it, Hazlitt did it in a simple way. There's nothing mysterious about this. And so in many ways, my book is a love letter of sorts to Hazlitt. I'm trying to do a 21st century version of it. The only difference with mine is I'm bringing more in the way of stories that people know, so that if someone just hears the word economics and says, oh gosh, a professor or a parent can say, okay, well, tonight I'm going to assign to you the Rolling Stones so that you understand taxation. Maybe that will draw more people in to see how easy it is and all the prosperity we're missing out on because people don't understand economics as well as they should.
Yeah, the Keynesians, the people, the central planners, the academics that are in power, that are the PhD economists, they've made things so difficult with all these aggregate demand models and formulas and equations. And, we've seen how bad these formulas perform in real life. They say, oh, if we only had better models, the economy would run so much more smoothly. But, one thing I've learned about Austrian School of Economics is I don't think the economy can be accurately modeled at all. It's just too complex and rapidly changing and adapting. We have this situation here with examples of politicians, they want to force the minimum wages higher, but yet, that's going to end up probably hurting a lot of people, their ability to get jobs, or low interest rates plus a higher wage means that a lot of businesses are going to switch to touch screens and robots, and this is going to accelerate that type of change.
Well, actually, I think what you describe would be a good thing. Now, let me be clear. The more businesses automate, touch screens and all that, I think that's generally a positive. My sense has always been about the minimum wage is that it doesn't force things like that as much as it's a terrible thing for the person who's got no experience at all. It's just a barrier to entry. Let's face it, most of those jobs that touch screens would get rid of are probably jobs that pay more than the minimum wage it is. And so as businesses automate, that doesn't put us on the breadlines. It just enhances the quality of the work, the kinds of things we can do. And so I want to get rid of that wage just because it hurts the least skilled. Now, in a more broad sense, measuring the economy or modeling the economy, are they kidding? One of the frequent things I write about is what a complete joke gross domestic product is. Who cares, for one, that first of all, it actually rises when government spending goes up? That actually increases this ridiculous number. Who cares that this ridiculous number actually goes down the more imports come into the United States, which is always a sign of strong economic growth? Who cares that we can bail out a company like GM and it can start producing a lot of cars with taxpayer money, and that will actually increase GDP? My biggest problem with this obnoxious number is that it presumes that a bunch of economists sitting in some office in Washington, D.C. can somehow measure the infinite decisions taking place among hundreds of millions of people every millisecond, that they think they can measure the economy. What has become of this profession? It's not a serious one anymore, and that's why I like the Austrians, is they never presumed to understand how they could model something so vast.
Yeah, I think this leftover, the GDP, I think it's a remnant of World War I and World War II central planning, just like, the payroll tax and so many other things that and other government programs that were supposed to be phased away or gotten rid of, and then they weren't. I know Murray Rothbard has said repeatedly, about the GDP. He said that government spending shouldn't be added to the GDP. He actually said it should be subtracted because he said it actually hurts the economy. It takes money out of people's pockets. It prevents the people in the private sector from having savings, from having capital, and being able to make their own decisions and reinvest it and stuff like that.
Oh, but by definition, it hurts the economy, because to believe that it actually adds to the economy is to believe that Nancy Pelosi and John Boehner are better at allocating the economy's resources than are you, me, Warren Buffett, Bill Gates, and Jeff Bezos. Well, they obviously aren't. And I think Hazlitt also had a very good answer that really applies to all of these things. He wrote in Economics in One Lesson what I think is probably the most important economic statement ever made by any economist. What is harmful or disastrous to an individual must be equally harmful or disastrous to the collection of individuals that make up a nation. And so when you think about that, and then you think about government spending, are you helped when government spends with abandon? Your personal situation is not improved because you get to keep less of your paycheck. I know I'm not helped. Most people, almost by definition, are not helped by it because their situation, at least financially, is reduced. Their savings are reduced, all the things that you describe. And so the Austrian way of looking at it, which involves looking at the individual, exposes just about everything that's believed by the economics profession as wildly false.
Yeah, I think one of the reasons that they've been able to keep the game going so longer, and you talk about this in your book, is they've changed, I guess they moved the goalposts. I talk about this in other podcasts, is, the value of these digital fiat currencies, whether it's the dollar, the euro, the yen, they're always changing, and it seems to me, they're being intentionally devalued. So the asset prices go higher and stuff like that. So you're talking about in your book, imagine playing football if the length of a yard changed on every play. That would be amazingly difficult for people in football to adapt to, because they wouldn't know what the rules are. The rules are kept on changing. So it just seems that the people who are in power, the decisions they're making, I guess their goal is to just keep printing money and keep asset prices higher and handing out goodies, in the form of special interest bonus payments or whatever to people's projects, just to keep the status quo going.
Yeah, the only thing I would say is I think the electorate is far smarter. The electorate sees right through it. And I think what needs to be made clear is they don't always devalue. Let's face it, in the 1980s and 1990s, the dollar strengthened quite a bit. No surprise that stocks did very well in both decades, because let's face it, what are investors buying when they invest? They're buying future dollars. And so the electorate was very happy. The economy was very good in the 80s and 90s because a strong dollar brought investment back into real ideas. In the 70s and then in the zeros, what happened was what von Mises described as a flight to the real. The dollar was weak. You saw that in the gold price. And so there's a flight into hard assets, least vulnerable to the devaluation. But my point here is, and so I think that needs to be made clear, that you can't devalue your way to higher assets. There's this myth out there right now that somehow quantitative easing has helped the stock market. Well, if true, why has Japan had 11 quantitative easings and stock market still half of what it was back in 1989? Government cannot create market prosperity. It quite simply cannot do it. And I would argue also that the electorate sees right through it. Look at how miserable the electorate was in the 1970s. Look how they kicked Nixon out because of Watergate. He began the devaluation. Look how they made Jimmy Carter a one-term president. Conversely, in the 80s and 90s, strong dollar, Reagan and Clinton were fairly popular presidents. The electorate despised George Bush, hasn't been happy with President Obama. And I think a major factor, again, is they know when their money is being devalued, and they don't like it.
Now, you have some interesting articles here on Forbes. You have an article about inequality and politicians. It seems to me, these politicians, they don't want to raise taxes on the citizenry, at least directly, but yet they've made campaign promises to get elected. The Clintons have gotten a lot of flack lately for the amount of money that's come into their foundation and other stuff. Do you think the fiat money has been one of the major causes of these corrupt politicians, or do you think that politicians are inherently corrupt?
Oh, I think politics attracts people that are kind of corrupt in the first place. I've never been one of these people who buys into the idea that fiat money empowers politicians or allows them to spend more. And let me explain why. Let's face it, what is the most attractive debt of all? It's that which pays out a currency that's credible in value. And so this notion that if we had a stable dollar, and I want a stable dollar, I want a dollar defined in gold, but this notion that if we had one, it would restrain government spending. Well, please. England adapted a stable pound in the late 17th century, and it enabled them to build an empire. Right or wrong, I'm not defending it. Because suddenly the pound was credible, they were able to raise enormous amounts of debt. The U.S. was on a gold standard for much of its history. It was able to raise enormous amounts of debt. Again, I'm not defending it. I'm just pointing it out. Politicians, in fact, if we had a stable dollar, the revenues to the federal government would be much greater just because the economy would be growing a lot more. These politicians like the Clintons could move even more dollars around. Again, I'm not saying it's a good thing. I think it's a bad thing. But if we want to get spending down, that's incumbent upon us to prove that our philosophy is correct, and our philosophy is correct. Government cannot effectively allocate capital, and it can't. Warren Buffett couldn't do it if he were senator, simply because there is no market discipline. In the private sector, we starve our failures. We have no choice but to. In the government sector, our failures live forever, and so we need to keep as much money out of Washington as possible. But getting economic growth, it does many great things. One of the things it won't do is keep money out of Washington. That's something we have to do philosophically.
Yeah, I agree. The economy is not going to be fixed by giving Washington more money to allocate. Although I live right outside of D.C. and I'm sure they would love that. We hear the politicians with the Amtrak incident there, especially the Democrats and the other bureaucrats in there saying, our budget was cut, and if we would have had billions more to spend, Amtrak would be fine. I mean, didn't they say this 5 years ago or 10 years ago that Amtrak would have been just fine if they had more money spent? And yet, they keep getting the budget and they keep misallocating the resources. I've been saying this for a while. Let's just sell Amtrak to the private sector. I want to ride around on bullet trains. I want nice seats. I want, really good internet connection and good food and all those things on a train. The United States doesn't have bullet trains because the government is running Amtrak.
Oh, you're absolutely right. Imagine what nice train rides we'd be taking up to New York and Boston. Imagine how much faster they would be if the private sector owned Amtrak. It would be brilliant. It would blow us away. It'd be something that we'd really look forward to. This idea that government needs to run things is just such a myth. And it's not a Republican or Democrat thing. I don't even think it's a corruption thing. When you don't have market discipline dictating how you act, you get lazy. It's as simple as that. Amtrak will not work well until it's in the private sector, and imagine how well it will work. You look at the post office, I send a lot of things in the mail. They get there, but imagine what a privatized post office would do. They just do a much better job of it.
Yeah, and I agree. Like over the long term, markets work a lot better, and like people would say, oh, the minimum wage, oh, people lose their jobs. We've heard a lot of people say that about arguing against art, but over the long term, markets are way more productive than the governments are, and government decrees or political decrees from politicians and rules and regulations. These things might benefit a small group of people in the short term, but like what Henry Hazlitt and Frederick Bastiat before him said, you can't see. It's the seen and the unseen. I think that's the term there.
No question. It's always you have to consider the unseen. The post office can get mail around, but imagine what a privatized post office could do. Imagine how many more services it would offer. And just in a more broad sense, you got to look at Silicon Valley. I think we need to keep going back to it because it's a good example. It's not the richest part of the United States because all of its businesses succeed. It's the richest precisely because the vast majority of its businesses fail. And through failure, you get perfection. It's the way that you get rid of Webvan so that you can fund Google. In sporting terms, it's the way that you get rid of Mike Shula so that Nick Saban can be head coach of Alabama. It's a very healthy process. The problem with government spending, it's not a Republican or Democrat thing. They don't have to starve their losers, and that means that the winners do not get funding quickly enough, and they don't get enough of it.
Yeah, I agree. It's not really a political thing because, the Republicans may talk that they're going to cut spending, but then they never do. So, it just seems that, like, both political parties, one of them may say they'll cut spending in welfare or warfare, and then they'll go and spend the money on something else. And, even the Paul Ryan tax cuts when he was running for vice president, they weren't a real cut. They were just a decrease in the increasing rate of spending. So, both parties are mostly just all talk and no action when it comes to actually like doing any deep cuts and putting the money back in people's pockets and letting them figure out where's best to allocate their own resources.
Yep. Let's face it, neither party. They all run for president, Congress, Senate, saying we're going to figure out ways to cut government waste. None of them do it. Economic growth just gives them more of it, but we don't want slow growth. Ultimately, it's something about we've got to win the battle, and the problem, at least for now, is that Republicans don't believe their own rhetoric. At least the Democrats, you could say they're kind of honest. They admit they think government works. Republicans claim they think it doesn't work, but whenever they're given a chance to actually reduce its size, they run away from it. Think back to Mitt Romney in 2012 when he's running for president. They say, would you cut spending the way that Ron Paul wants you to cut it? And he said, oh, no, that would hurt the economy. It'd send us into recession. These guys do not believe their rhetoric. They do not believe what we know to be true, that a reduction in government spending is automatically a boost to economic growth because it's the placement of resources created by the private sector back in the private sector, whereby Nancy Pelosi and John Boehner are not allocating always grows the economy.
Yeah, I agree. The politicians, they'll hand out, they'll talk about their one good investment in Tesla, right? But what they won't talk about, or the mainstream media will stop talking about it, is there are tens of bad ones where the Department of Energy was ordered by politicians to allocate all this money to solar and wind companies that went bankrupt, and there's just countless examples of bad government investments that the politicians don't like talking about.
Yep.
Well,
yeah,
Sure. Okay, sorry, go ahead.
Oh, yeah. No, they cannot be trusted in this way, and so it's incumbent upon us to once again explain, to try to help both sides understand that it's not an ideological thing. Nancy Pelosi and John Boehner and Harry Reid and Mitch McConnell do not know how to allocate capital. They can't do it, and so leave it in the private sector and imagine the growth they'll get.
Oh, they know how to get corrupt deals, because Harry Reid, I heard from a Las Vegas resident, he's been doing these, corrupt land deals and stuff like that, and they know how to. I think the newest scandal, John, was that Congress was trying to fight to maintain so they can do their insider stock trading. So they don't know how to do honest business investments, but they know how to do these corrupt crony deals, behind closed doors because they think they're above the law.
Yep. Yep. No, they all do it, and the answer once again is there's going to be corruption when you're talking about that kind of money. There's invariably going to be corruption, and so the idea has got to be that we stop looking for ways to increase revenues to Washington. That we see when we talk about tax cuts, we're seriously talking about ways to seriously shrink the amount of money flowing into Washington. I'd like to begin with a consumption tax and cut it to the bone so low that just about every dollar produced in the private sector stays there.
Yeah, I listened to a tax foundation member give a presentation a year or two ago at a conference, and he said basically we can cut the income tax to zero and just pay like a 2% value-added tax on everything, and it would cover all of our tax needs. But, the Democrats would block it, and certain special interest groups would block it, et cetera, et cetera. But, we shouldn't be penalized for wanting to produce more, for wanting to reinvest and create jobs and, create new products and services. That's not what the United States was founded on.
Absolutely not. This should be what we're talking about constantly, and the conversation's got to be in terms of the unseen. One of the big mistakes that Republicans make, and I think they make it because they don't truly understand their rhetoric, is they say, well, we've got to make tough choices and we've got to make sacrifices. And when they say that, they're talking about shrinking the size and scope of government. Oh, I'm sorry. It's not a sacrifice for Americans if the size of Washington is shrunk. It's not a tough choice to get rid of departments and whole government functions that no one and most of the people in the U.S. don't experience, but they pay for. There is no sacrifice involved if we reduce the burden that is government. But Republicans talk about it in those terms instead of saying, imagine how much closer and how much more quickly we'll get to a cancer cure if government is consuming less. Imagine how much closer we'll all get to a place where we'll all have our own private jets to fly around if government spends less. Imagine how much more luxurious our lives will be, how much higher our living standards will be if government is spending less. Because that's what will happen. Von Mises knew this well. He called the luxuries of the rich historical in nature. He understood that what the rich enjoy is what we'll all enjoy if markets stay free. And so what I just said about the private jets, probably in your generation, but certainly the next generation, those people, all they'll know is private jets getting around. That will be the normal mode of transportation. The shame is that it's not here quicker, and I would argue the major reason for that is government is consuming so much of the resources that we produced in the first place.
Yeah, I agree. The economy would be more productive, and prices of these things would eventually fall. We would have more bullet trains and all these other things. We're just not getting them. In the technology industry, these things are happening. There's more free markets there than pretty much the rest of the economy. But in so many other industries, there being, so much red tape and so much rules and regulations and barricades and roadblocks. It's making progress and innovation very difficult, and it's making it difficult for small business owners and entrepreneurs in those older industries to want to invest. They're scared with all these Obamacare tax and so many other things. That leads me to my last topic for this interview. You have an article out earlier in May about the Millennials. We have a lot of younger listeners to our program who they're either in college or they just graduated. They're entry-level business school. What's your opinion about the student loan debt crisis in the United States?
I think it's probably overrated. Look, I've never bought into the idea that education matters that much. I think if you want to learn, if you're curious, you're going to figure out a way to learn. College is a credential, and I think in a rich country like ours, people will pay up to go to a college because they want to make friends. They want to do all sorts of things. All this stuff about the millennial crisis, I think, is overrated. If you look throughout history, they've said that about every generation. Every time there's a recession, they say that the youthful generation who's youthful during that period will underperform their parents. They're going to live at home with their parents for life. They're not going to enjoy the trappings of life that their parents did. I graduated from college in 1992. At the time, we were in a slight recession. Movies came out like Slacker and Reality Bites that were about young people, the millennials of that time, who were going to spend their lives folding shirts at the Gap and being lazy and everything. Well, my generation wound up being the richest in the history of the richest nation in the history of the world. Millennials are seen as lazy and indolent right now in the way that mine was. But you watch, once the economy turns around, and it's on the verge of it thanks to gridlock in Washington, the millennials are going to get wildly rich, beautifully rich. They're going to make my generation, Generation X, look like pikers. And so there's this crisis right now of student debt and everything. I think it's unfortunate that government's so involved in education. Okay, but believe me, millennials are going to be fine. Invariably, we get the policies right enough that people thrive in this country.
Yeah, I think they have the skills to over the long term end up being fine. You know, as long as I think the difference here maybe in this generation, others, is the debt. You know, if you already have mass amounts of student loan debt and you don't have a good paying job, then you might not have a good opportunity to become as prosperous. But as long as you learn the skills, you know, cheaply and efficiently, and there's lots of places to do that, whether it's online or audiobooks, there's, you know, used books are very cheap. People can go to libraries. There's so many sources of information and education now. You don't have to pay mass amounts of money and take on mass amounts of debt to learn. You can do it on your own. You can take a part-time job and learn and then learn on your own afterwards. So there's an opportunity there for people to do that, and people can add skills very quickly now, whereas in the past they can't. I mean, people can learn coding online by themselves pretty easily and efficiently compared to the past.
Absolutely, absolutely. There's not a career skill out there that you can't learn by doing. You want to succeed in life, it's fairly simple. Work hard. What will make you work hard? Do something that animates your individual talents. That's the beauty of living in the United States. That's the beauty of free trade. It maximizes the possibility that we get to do the work that most animates our skills as individuals. And so find what you love. I really believe that. I know it's a cliche because if you do that, it's not going to be as much work, and you will learn what you need to learn. But the millennials, they are going to be fine. My generation, the youthful generation of the late 70s, they always say during difficult economic periods that these kids are going to underperform, but they always get things right, and they will. It's really I can't wait to see what the millennials achieve in the future. It's going to be grand.
Yeah, we are seeing some amazing millennial CEOs and entrepreneurs. You know, Mark Zuckerberg. I think the first female entrepreneur with the blood company, I'm forgetting the name right now. She's already worth, I think, $10 billion. She came up with the first blood test. It takes one drop of blood instead of a whole vial, and you can get all this information on the blood test in only like 20 or 30 seconds, whereas it used to take, you know, a day. So, I mean, there is the opportunity out there. What I'm worried about, John, is the people who have already taken on the debt, though. So, I mean, there's a lot of people out there, you know, who have gone to school. Maybe they went for the wrong majors. They didn't make good career decisions in college, and now they're stuck with a lot of debt. So I'm not sure there's as much opportunity for them. But, you know, I guess people have to learn the hard way that as an adult you have to be very careful with the debt you take on.
Well, just get a good job and pay it off. I mean, that's not as simple as it sounds, but debt is debt. Just work hard and pay it off. Let's face it, if it can help in life to have a nice degree by your name. I'm not saying that the learning matters, but these kids will be fine. This is not the first generation to graduate from college with lots of debt. I think the average is $27,000. Millennials will much more than that. They'll earn exponentially more than that over time. It's not something insurmountable. It sounds insurmountable now because the economy is relatively weak, but if you look throughout U.S. history, we figure things out. We get the policy correct enough that the economy takes off. I'm not worried about this generation. Lest we forget, millennials around the world would give anything to live in the United States. It's still where the opportunity is. These kids will be fine.
That's a good attitude. I like your attitude. Well, please tell our listeners where they can find your book and also about your Forbes column and realclearmarkets.com.
Well, I have a weekly Forbes column. Right, I usually put out a couple a week. You can find me on Forbes.com. You can follow me there. I'm also the editor of Real Clear Markets, and so all of my columns go up at Real Clear Markets on a daily basis. And then my book, let's face it, I wrote it because economics is simple, and more important, we're missing out on enormous amounts of growth because we're not getting policy right. My book lays out the basics to prosperous economic policy through stories you all know. You can find Popular Economics on Amazon, at Barnes & Noble, bookstores around the country, and I really think you'll enjoy it, and it will, I think, enlighten in ways that the typical economics textbook does not.
Yeah, and for our listeners there who like to listen on the go, who like audiobooks like me, I also noticed that Popular Economics is on Audible, so I'm going to try to check that out in the near future. It's got very good reviews, your book so far. It's got almost 5-star reviews from I think 30-something people, so it's a very good start.
Yep. Well, thank you very much. I've got my fingers crossed.
Well, hopefully this podcast will enlighten a few more people who are learning about economics, or thought it was too difficult with all the Keynesian gobbledygook that they hear on the mainstream TV, and they'll take a chance on your book.
Perfect. Well, thanks for having me on.
Great. Well, hopefully I can have you back on in the near future. I really enjoyed this interview.
Anytime.